Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin trades near $67,147 as markets consolidate through the Easter weekend, but beneath the surface calm, major structural shifts are underway. Geopolitical tensions and quantum computing threats dominate headlines, while regulators accelerate their push to define the rules for stablecoins and prediction markets. Oil prices hit their highest levels since 2008, with Brent crude reaching $141 per barrel as the Strait of Hormuz crisis intensifies. This energy shock is pushing inflation expectations higher globally, undermining the rate cut narrative that previously supported crypto rallies. Despite institutional inflows into Bitcoin ETFs totaling $22 million this week, whale distribution continues as wallets holding 1,000 to 10,000 BTC have shed nearly 188,000 Bitcoin since last year's peak. Google's quantum AI team published research revealing that quantum computers could potentially crack Bitcoin's cryptography in just 9 minutes, with fewer than 500,000 physical qubits. Approximately 6.9 million Bitcoin with exposed public keys face immediate risk. Algorand surged 44% this week after Google's paper cited the blockchain as an early adopter of post-quantum cryptography, with Falcon digital signatures already deployed. Circle is under fire after the $285 million Drift protocol hack on April 2nd. Critics, including blockchain investigator ZachXBT, blasted Circle for not freezing stolen USDC fast enough, allowing hackers to bridge $232 million from Solana to Ethereum. Circle defended its position, stating it freezes assets when legally required, but legal experts argue lawmakers must provide safe harbor protections for good faith interventions during suspected illicit activity. The CFTC filed lawsuits against Arizona, Connecticut, and Illinois on April 2nd, seeking to establish federal preemption over state gambling laws for crypto prediction markets. The agency argues event contracts on federally regulated exchanges fall exclusively under the Commodity Exchange Act. States counter that prediction markets bypass licensing, responsible gaming controls, and tax regimes, with sports betting operators reporting over $620 million in lost gaming taxes since early 2025. The FDIC scheduled a critical stablecoin regulation meeting for April 7th to finalize Genius Act implementation rules. The law, signed in July 2025, established the first federal stablecoin framework. Regulators face a July 18th deadline to finalize rules. Federal Reserve Governor Michael Barr flagged concerns around reserve requirements and regulatory arbitrage risks. The Ethereum Foundation staked $93 million in ETH on Thursday, bringing total staked holdings to approximately $143 million. This shift from selling Treasury ETH to yield generation removes recurring sell pressure and signals confidence in proof-of-stake sustainability. Charles Schwab announced plans to launch spot Bitcoin and Ethereum trading in the first half of 2026 through its Premier Bank unit, leveraging nearly $12 trillion in client assets. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.